Crypto stopped falling for a brief second on Monday for the same reason stocks jump, US yields fall as Fed rate cut bets increase. So now the market's really starting to price in that Fed rate cut, but at the same time, just like Nvidia saved us last week, they might hurt us this week. Nvidia shares drop on report of Google challenge in AI chips. So Nvidia shares are tanking in the early morning hours of Tuesday because Google's creating their own chips. Amazon's creating their own chips. Tesla, Elon Musk just came out and said that they're probably going to be creating their own chips. And the chips are actually very good. Their entire data center is being built without Nvidia. And there's a lot of money betting on Nvidia. So that could cause some downward moves in the stock market, obviously in crypto. But as long as the Federal Reserve is talking dovish all of a sudden, then that could cause a massive rally into year end. And it's very likely that that happens because look at the odds. We get a massive rally whenever Bitcoin is this oversold. So when the blue line hit this level, Bitcoin was here, it hit 49K, then it went to 100K. When the blue line hit this level, Bitcoin was at 74K, it jumped to 120K. Now the blue line's down here and we're at 89,000. What do you think comes next? We're ridiculously oversold in these assets. So potentially a meltdown because of something to do with AI and Nvidia, followed by massive dovish Fed talk, followed by a big rally. Very likely. So that's why we stay on top of the fundamentals of these revolutionary assets. As long as they're growing exponentially, there's massive upside. In blue, we see November 24 year-to-date volume. In gray, we see November 25 year-to-date volume on Aerodrome. $204 billion year-to-date this year compared to $74 billion last year. That is a gigantic asset, Aerodrome. And then we have for Chainlink, the first Chainlink ETF, December 2, 2025. So as the AI trade starts to unravel, a lot of that liquidity could move straight into crypto.